Let's clear up the fairy tale before it metastasizes any further. People love to say Singapore is high pay, high cost. They whisper it like a warning. They say Japan is stable, safe, balanced. That comparison is adorable and wrong. Japan is not approaching Singapore's low-wage reality. Japan already lives in it. It just doesn't advertise it in English. Here's the trick Japan perfected. Low wages, high discipline, zero outrage. Singapore at least has the decency to be honest. If you earn little, you know you earn little. If you're disposable, the contract literally says so. Japan? Japan pays you like a developing country while demanding first-world obedience, emotional submission, and unpaid loyalty. That's not stability. That's wage theatre. Let's talk numbers, since feelings don't pay rent. A massive portion of Japanese workers live on what foreigners imagine as starter wages. Monthly pay that barely clears survival. No meaningful raises, no stock compensation, no housing upside, no capital accumulation. And before someone panics and says, "But cost of living in Japan is cheaper than Singapore." Stop. Breathe. Cheap ramen is not wealth. A Y500 lunch does not compensate for a lifetime without assets. Japan solved inflation by killing wages. Singapore manages wages by importing labour. Different methods, same destination for the bottom half. In Singapore, low wages are visible, migrant, explicit, contractual. In Japan, low wages are hidden behind words like regular employee, company culture, and lifetime stability. Stability of what? Stability of never owning anything? Here's the part nobody likes to say out loud. Japanese workers are not poor because Japan failed. They are poor because Japan succeeded at protecting capital, corporate cash reserves at record highs, stock market ratios that make global investors salivate, real estate assets frozen in the hands of the old and the leveraged. Workers didn't lose purchasing power by accident. It was redistributed upward, quietly, politely, efficiently. This is why Japanese equities look so attractive on paper: low labor costs, docile workforce, predictable margins. Japan is not a welfare state for people. It's a welfare state for balance sheets. And here's the insult. Japan watches Singapore and pretends it's something else, pretends it's more humane, pretends it's not the same model with softer lighting. Singapore says, "You are labor." Japan says, "You are family." Both mean, don't expect ownership. If this is already making you uncomfortable, good. That means you're still awake. Because the next chapters get worse. We're going to talk about real wages versus fake prices, why savings collapsed, why property became a closed club, why stocks soar while people shrink, and why Japan's middle class is a historical exhibit, not a living group. Before we go on, do the algorithmic ritual. If you want analysis that doesn't flatter nations, if you want finance without tourism filters, if you want to understand where wages actually die, hit like, subscribe. This channel survives on people who prefer numbers over myths. Japan didn't wake up one day and discover wages were weak. This wasn't a natural disaster. This was a policy outcome repeated for 3 decades with impressive consistency. Let's establish one boring but lethal truth. Nominal wages staying flat while prices rise equals a wage cut. Not metaphorical, not emotional, mathematical. Japan calls this price stability. Workers call it, "Why am I always broke?" From the late 1990s onward, Japan perfected a system where salaries barely moved, but everything else did. Rent crept, utilities crept, insurance crept, food shrank in size and rose in price. This wasn't inflation panic, this was controlled erosion. Singapore at least lets inflation punch you in the face. Japan prefers slow poisoning, and here's the scam people miss. Japan loves to show low headline inflation numbers. What they don't show is asset inflation, because assets are owned by people who already won. Stocks, up. Urban land, locked. Commercial real estate, consolidated. Wages, frozen like a museum exhibit labelled middle-class male circa 1994. Real wages in Japan have been declining so long that younger workers think stagnation is normal. They don't feel robbed, they feel grateful to be employed. That's the real innovation. Japan didn't just suppress wages, it reset expectations. In Singapore, people complain loudly about rent, CPF, and costs. In Japan, people apologize for wanting a raise. And now comes the part investors quietly enjoy. Low wages mean higher corporate margins. Higher margins mean better EPS. Better EPS means stock buybacks and index strength. So when someone says, Japan's stock market is strong, yes, exactly. Because labor lost. This is why global funds love Japan again. Currency weak, labor cheap, corporate governance rebranded just enough to look shareholder-friendly. The worker never entered the equation. And savings. Let's talk savings, because this is where the trap snaps shut. When wages don't rise, savings become optional. When savings disappear, investment becomes impossible. When investment is impossible, inequality becomes permanent. Japan now has a massive cohort living paycheck to paycheck in a country that pretends it's affluent. Singapore imports low-wage workers. Japan manufactures them domestically. Different branding, same result. And this is why comparisons make people angry. Because Japan isn't poorer than Singapore in daily life. It's poorer in future ownership. No capital growth, no property ladder, no equity participation, just stable exhaustion. If you're starting to see why this isn't about cost of living, good. That phrase is used to avoid saying income failure. Next chapter, we go where people get defensive. Real estate. Why Japan's housing looks cheap but keeps you poor. Why Singapore's prices look insane but actually signal something else. And why neither system was designed for workers to win. Before we continue, do the obvious thing. If this analysis matches what you see but never hear said aloud, hit like. Subscribe. This channel exists because polite economics is useless. Japan's favorite coping mechanism sounds like this. At least housing is cheap. That sentence has ended more intellectual conversations than alcohol ever could. Yes, apartments in Japan look affordable on paper. Yes, you can rent something livable without selling a kidney. And yes, compared to Singapore's property prices, Japan looks humane. That's the bait. Cheap housing in a low-wage economy is not generosity, it's containment. Japan didn't make housing cheap to help workers get ahead. Japan made housing non-appreciating, so workers would never catch up. Here's the part nobody likes to admit. In most economies, housing is how ordinary people build wealth. You buy, you hold, you benefit from inflation and urban growth. In Japan, housing is treated like a depreciating appliance. Buy a home, and the value politely evaporates. Land appreciates selectively. Buildings decay financially on schedule. So, what happens? You pay rent forever. Or you buy something that never becomes leverage. Either way, you don't accumulate capital. Singapore's real estate market is cruel, loud, and expensive. But it sends a clear message. Property equals power. Ownership equals insulation from wage erosion. Japan sends the opposite message. Don't speculate. Don't expect appreciation. Don't imagine upside. Just live quietly and be grateful your rent didn't spike this year. That gratitude is expensive. Because while workers are pacified by stable rents, capital is busy elsewhere. Corporate real estate is consolidated. Prime land is hoarded by institutions. Urban redevelopment benefits balance sheets, not tenants. This is why Japan feels affordable, but never feels prosperous. You survive comfortably. You don't advance. And this is where the Singapore comparison makes people uncomfortable. Singapore prices you out aggressively. Japan prices you in permanently. One shocks you. The other numbs you. From a finance perspective, both systems are rational. From a worker's perspective, only one even pretends to offer an escape hatch. In Japan, low housing costs mask income failure. They prevent revolt, not poverty. You don't riot because you can still pay rent. You don't invest because you have nothing left after survival. And slowly, the idea of wealth becomes something you see on TV. This is why Japan's middle class didn't collapse dramatically. It dissolved quietly. No crash, no uprising, just decades of financial sedation. Next chapter is where all of this connects. Stocks. Why Japanese equities look amazing while people feel poor. Why investors love this setup. And why the system will defend itself long after workers are exhausted. Before we go there, do the predictable thing. If this made you uncomfortable in a familiar way, hit like, subscribe. Algorithms reward honesty only when people push back. If you want to understand modern Japan, stop asking why people are tired. Ask why investors are smiling. Because from a capital perspective, Japan is working exactly as designed. Low wages are not a flaw. They are a feature. Every yen not paid to workers shows up somewhere else, on balance sheets, in retained earnings, inside dividend policies, behind buybacks that quietly lift EPS while salaries stay politely still. This is why global funds rediscovered Japan. Weak currency, perfect for exporters. Labor discipline, unmatched. Union resistance, minimal. Political risk, almost non-existent. Japan is the dream market for capital that hates surprises. And here's the uncomfortable math. When wages don't rise, consumption weakens. When consumption weakens, companies don't expand domestically. When companies don't expand, they cut costs and optimize margins. That looks bad for people. It looks fantastic for stock ratios. Japan didn't become an investment story despite wage collapse. It became one because of it. This is why you keep seeing headlines like Japanese equities outperform while households quietly cut protein and postpone life. Stocks don't care about fertility rates. They don't care about marriage decline. They don't care about exhausted commuters. They care about predictability. And Japan offers something rare. A society that absorbs economic pain without political backlash. No mass strikes, no populist wage revolts, no sudden policy swings that spook markets. Just a population trained to internalize loss as personal failure. Singapore does this loudly. Japan does it silently. Singapore tells workers to upgrade or leave. Japan tells workers to endure. From capital's point of view, both are elegant. This is why comparing quality of life misses the point. Japan did not lose its way. It chose stability over mobility, capital over labor, assets over income, and now the result is visible. A stock market that looks world-class, a workforce that feels permanently behind, a middle class that exists mostly in memory and marketing. This is not a temporary phase. It's a settled equilibrium. And here's the final insult. Japan will continue to be praised internationally for its resilience, while its workers quietly downshift expectations for another generation. Because nothing terrifies a system like an angry poor population. Japan solved that by creating a calm one. If this series made you rethink cheap, stable, and safe, that's the point. If you want more analysis that treats finance as power, not vibes, hit like. Subscribe. This channel is not here to comfort nations, it's here to dissect them.